call Dean back out in a minute, but I just sit here and I'm blown away by this kind of ideas that people can like make, come up with and have so many parts of the problem worked out in their head. I just find it so inspiring and cool. So yeah, and having Dean here, for anyone who was here last year, he was kind of the hit of the symposium, and so we're so lucky to get him back, and he's such a experienced person in this field, and widely respected and comfortable on the stage. So we are lucky to be able to be having him join us again on this next and final panel for the day. Professor Jennifer Kuan here, who's just coming out from CSUMB, Dean, and Alexi Sevastopoulos, here he is, good to see you, and John Sisk. I will just say a word that this panel, this conference, as I mentioned in the beginning, has been buffeted by world events. And we did have our friend Yotam Avrahami, who was supposed to be here, and Jennifer has kindly stepped in to handle the role of moderator, but Yotam was called into active duty in Israel just over the weekend. And so, we know that the world is suffering in different ways, and over there especially. So I just want to give a shout out to Yotam and hope he and his family is safe over there, and whatever happens, I hope it happens fast and gets over soon. But in any case, this panel is intended to be a discussion. This was Yotam's idea, the new ROI in the AAM markets, and he's an expert in this field. And I think what we will do is leave it up to the panelists and the moderators to carry the conversation in whatever way feels right to them, given the absence of Yotam to moderate us down this path. He did provide some input on the preparations, but with that as an introduction, the floor is all yours.
All right. Thank you, Josh. So welcome, everyone. Thank you for coming. My name is Jenny Kuan. I am the interim executive director at IIED, which is co-sponsoring this event. I'm also a faculty member in the College of Business. I teach entrepreneurship and economics, and I study venture capital as a research topic and started my own venture capital fund as a field experiment. So I am really super excited to be invited to moderate this panel of incredible experts in advanced air mobility, and so I'm going to introduce my guests here. Dean Donovan is the co-founder and board member of Volaris, Mexico's largest airline, and he wasn't busy enough, so he started Casino Marketing Alliance, a travel analytics company, and is now a managing director and co-founder of an investment firm, Diamond Stream Partners, which is focused in investing in aviation. So, Dean, thank you so much for being here. Let's see, we have Alexi Sevastopoulos, who is the founder of Armature Systems. He's coming to us from Santa Cruz and Santa Clara. Armature is an enterprise software integration services company based in Santa Clara. He is a general partner in Santa Clara Ventures, which is a fund that invests in Santa Clara University alumni, and is also a general partner at Santa Cruz Ventures. So that's a venture fund focused here on technology startups here in Santa Cruz. So thank you, Alexi, for coming and sharing your expertise with us. And last but not least, our own John Sisk, who's Executive Vice President and Chief Banking Officer at Santa Cruz County Bank. He is also previously the founder of Lighthouse Bank. He's had a 25-plus year career in community banking and is a pillar of the community serving in nonprofits that support Santa Cruz County, including numerous foundations, Dominican Hospital Foundation, Santa Cruz Works, Santa Cruz Board Writers Club, and the list goes on. So, John, thank you so much for your service and for being here. So I want to kick off this conversation with Dean. So, Dean, people talk about starting an airline as the craziest thing you could possibly do. It's the hardest thing ever, and you've done it. Your company is successful. And so you are now the owner of a travel analytics company. Something tells me you know something that we don't know. Can you tell us what you know, why you're so excited about aviation and, in focusing all your investment activity in that area? Tell us what you know.
Yeah, sure. So, we did start the airline in 2004, and learned some important lessons about it. And probably the most important lesson was something that Carl alluded to on the previous panel, which is cost is pretty darn important in transportation. If you don't have low-cost transportation, you're going to have trouble getting your product sold. And at Volaris, we built an entirely new market out of people that were underserved, the Mexican middle class that had traveled on buses and had really never flown before. And so when in 2015, 2016, I saw the electrification of aviation coming, and people were working on projects in that area, and autonomous flight coming, it became clear that aviation was going to have a pretty significant transformation. And really for two reasons. One is electrification made propulsion of small aircraft actually more efficient than propulsion for large aircraft, which is pretty remarkable if you think about it, because it had always gone the other way around. For the previous 70 years, increasing scale has always been aviation, commercial aviation's friend, and small scale has been its enemy. And then secondly, autonomy, which people mostly think of as replacing pilots, but that's really not the way to think about it, is going to enable the creation of all kinds of new aircraft types that don't have anyone in them at all. And when you do that, you create the opportunity to replace ground vehicles with aircraft for missions that ground vehicles really aren't very well suited for. So what we saw when we founded the fund was there was just going to be a massive opportunity under 500 miles where aviation has almost no share of travel or freight, and that opportunity would really change transportation in our economy and our lives in a very significant way.
Okay, and so you're thinking about passenger travel as well as, are you thinking also cargo and that kind of thing? And so we know about Amazon's idea of, like drone delivery, but yeah, what kinds of applications are you thinking about?
Yeah, so there's passenger, obviously, which, Joey's working on, relatively small passenger vehicles. There's people like Hard Aerospace that have a 29-seat hybrid electric aircraft. There's freight, so there's a lot of different freight concepts. I'd say the two leading ones right now are Dronamics out of Bulgaria, which is or Pika, which is a similar concept, very small, fixed-wing, autonomous freight drone, and Elroy, which is an eVTOL. But then there's a whole series of applications with smaller aircraft that really are more oriented around robotics than they are around moving freight or moving passengers. And, a good example of that would be a company like Wingtra. Surveys have traditionally been done, land surveys have traditionally been done with a bunch of people with those tripods. They do the tripods and they shoot it to the other tripod and they say, okay, this is where your land ends. That's a very slow, very expensive way of doing land survey. You can do that with a drone now for a fraction of the cost. And when you can do it for a fraction of the cost, you can actually do those surveys on a daily basis. So you're starting to see construction companies literally survey the site every single day so that you can actually understand what the real progress is against the project on a daily basis. Same thing with mine. So that's just one example of where robotics is going to change the economy. There's hundreds and hundreds and hundreds of applications like that.
Okay, that is so interesting. And I guess, really a lot of opportunity for an investor with some expertise in this space.
That's the idea.
Absolutely. Okay, so Alexi, I would like to go to you now. And so things that, Dean was talking about were kind of on a global scale of kind of what this industry is looking like globally. Can you bring this home for us? So you're in Santa Cruz. You also have deep ties to Santa Clara, which is not that far, right? It's in our neighborhood. What are you seeing coming out of, either Santa Cruz or Santa Clara? What are you seeing in your investment activity?
Yeah, thanks for having me, by the way. I mean, there's a lot happening, right? I mean, I think you see a lot of things in the media, right? That's driving a lot of inspiration. You see a lot of things that are, I think, tangential to everything we're trying to accomplish, like the headwinds of climate change, right? So that goes hand in hand with, so-called clean tech. I've personally invested in one flying car company called Aleph, which takes a slightly different tack. It's not considered an eVTOL. It's a different strategy, I think, though not specifically competitive to what larger companies like Joby and Archer of the world are trying to tackle. But just like anything, right? They're going to be the leaders. You're going to see lots of, I think, second and third order companies that that spawn from that kind of opportunity, right? I mean, there's manufacturing that needs to be, rethought and redeveloped. There's tooling. There's skill sets that need to be readjusted. There's talent that needs to be drawn away from incumbency, right? And not to mention there's massive cost of capital that has to go into this industry, right? I mean, you look at the amount of capital it took for whatever FAA regulation has already occurred for Joby and Archer. I mean, we're in the hundreds of millions of dollars, right? So considering macroeconomics now on a global scale, the cost of capital is very expensive right now, right? You see VC funding heavily down, right? And so when you look at VC funding, I think historically it's, people call it cyclical, but it's not a sine wave or a cosine wave, right? It's really more like a sawtooth. It kind of goes up and then just drops off very quickly, actually, and takes a long time for it to recover and gradually escalate again. And so, I think we're experiencing the down now, right? We're experiencing the hangover a bit from a lot of really overinflated companies and opportunities. So the mid-level VC funding is really down. So a lot have shifted to early stage. Those with capital shifting to later stage for M&A opportunity, as those are already out there are taking big hits on their valuation, right? So you typically see consolidation in markets like this right now, which I think is a good thing in some ways too, right? Because in tackling incumbency, I mean, we've been transporting people the same way for the last 100 years in general, right? It's going to have to, in my opinion, right, it's going to have to require partnership with, I think, major airlines out there who've already cut through a lot of the red tape with FAA. You see some of that already happening, right, with some of the larger companies that are making changes out there. From, I think, a startup perspective, I haven't seen personally a ton in my ecosystem over the hill. I see a lot here, right? I mean, our fund is primarily dedicated to clean tech. Obviously, there's a ton happening here locally, a lot of local pride with Joby specifically, and people are hoping, with opening of new manufacturing facilities, it's going to lead to lots of change, lots of new talent and new people in the area that are going to help develop it into, I guess, an aviation airspace more than it already has been, right? Yeah, I guess maybe I'll land there.
Yeah, and so it is kind of interesting that you would get this kind of really exciting company coming up in this area, Santa Cruz, and are you saying that there's just not that much in this space in Silicon Valley where, we kind of expect to see innovation in all kinds of areas? So is that kind of, you're thinking there's more of that activity happening here? Might there be other things. We need an ecosystem, right, of innovative suppliers for companies in this space.
Yeah, I'll give you an example, right? So in the company we invested in, Aleph, they wanted to use Moffett Field as test grounds for flights, but there's not much free space in general in the Silicon Valley, so Moffett seemed like a good idea. However, that's a large part of that space, believe it or not, is actually owned by Google Ventures. And not only that, there were also other headwinds that were stopping them, such as birds that lived in the area that they didn't want to disrupt, right? There's a natural ecosystem in new areas people are trying to fly, right? So you have all these hurdles that sort of seem to be unexpected along the way. There is some activity for sure, but I don't know if, the Bay Area, Silicon Valley ecosystem is prime for aviation because there's not much open space for test flights, for example, which I think is why a lot of people are focusing in this area a lot more, right?
Right, and
one reason at least.
it's an investment environment that has tried to avoid manufacturing, right? So I guess maybe that's part of it as well. So yeah, I mean, thank you so much for that kind of straddling, Santa Clara and Santa Cruz. John, you're very much embedded here in Santa Cruz, in our area. As a community banker, you have paved the way for a lot of Joby and other companies' ability to put roots down here and to grow. Can you talk about what, community banking, what that role is and what you guys had to do? And I just don't envy you for, having that kind of job, but you've done it.
Yeah, definitely. To start off, a community banker in the aerospace realm, I know absolutely nothing about it. But I do know that as a community banker, we want to build vibrant communities. And when you have a company like Joby or Archer, they're looking for the very best talent out there. And talent wants to live in a vibrant community. So that's where our community bank comes into play. We're funny. If you look at this area, this is a great example right now. You look at what's happening at the airport. You look at what's happening here at the college. There's a vibrant community that is under construction here. And our bank is helping fund improvements here. We're funding apartment buildings, we're funding subdivisions, we're funding new hotels, we're funding new shopping centers. So we're creating a vibrant community for these companies to bring in the talent. And I think, on the periphery, that's really where the community bank shines. Most of these companies are in different stages of funding. They're either friends and family, venture capital. Some of them have access to the public markets. Very few of them are actually funded by a bank like ours. But again, we're doing the periphery funding to help support them.
You've done a lot, right? So can you talk about the challenges that you had to overcome in doing this kind of stuff, and also how you think about risk? There are a number of banks that have been kind of suffering in this environment and high interest rates and stuff like that. How are you guys thinking about that?
Yeah, I'll give you the secret to banking. So, we're such a highly regulated industry. Every banker wants to find a primary and a secondary source of repayment. If you can identify a primary and secondary source of repayment, you have a loan. In most startups, you can't identify a primary and a secondary source of repayment. Most startups where banks will be looking for guarantors, nobody wants to guarantee a loan. Nobody wants to put up their house as collateral. So those are very difficult deals to finance. Therefore, there's venture capital and friends and family. As the financing progresses and you start to get contracts and you've got receivables, that's where the bank hops in, and we've got hard assets that we can actually secure against. It makes it a little easier for us to do deals.
I think that you've done so much work in this area, in our region, and I think it's really fantastic that you've been able to do that. I want to go back to something that Alexi talked about, which is other sources of finance for these kinds of startups. And this is a question for Alexi and for Dean. If we think about, I think what you were kind of talking about is having corporations like airlines also invest. I know that Joby had Toyota invested. So these are corporate venture capital funds, or CVC. And it seems like a kind of a good fit in this space. So can you talk more about, kind of what that means? So in addition to kind of airlines, what are other CVCs that you can think of, industry CVCs, and whether that you think that's going to step up and make it easier for the earlier stage investors to come in and do this?
Sure, yeah. As far as like earlier stage investors go, I mean, depending on the size of your fund, depending on your risk aversion, you're always looking for indicators such as strong partnership early on, right? An unrelated way, I'm also an investor in an automated tire changing system, robotic system, right? Discount Tire is an early partner, right? A massive indicator. Some of that's protective as well, right? Because they want to protect their incumbency and find a way to pivot into something that might disrupt them, right? It's, I think, a large reason why some of these CVCs exist as well, because they're looking at M&A opportunities that won't disrupt the mothership. They've been rowing in one direction for decades, right? It's very, very hard to pivot and compete against, innovation that's very fluid. So you see a lot of that happen, and it's not a bad thing. I think it's just a sign of what the environment looks like today for success when you have massive incumbents, right? I honestly don't have a good answer around how, even a wonderful, tech-savvy company like Joby can compete head-to-head without a partnership from someone major in the aviation space. I don't know. Maybe let's talk to the expert over here.
Yeah, okay. Yeah, so there's a bunch of different sources of capital. I think airlines are one. Aerospace companies also have venture capital groups. So we work with RTX, we work with Lockheed. The oil companies have venture capital groups. So we've worked with Saudi Aramco and Chevron, Shell. So there's a lot of different sources of value in investing for companies. And corporate venture capital groups are one. I totally agree with you, Alexi, that that kind of endorsement is very helpful to early stage companies. Carl and I talked a little bit about Defense Department contracts being a non-dilutive source of funding, which is really, really important in this space, and really provides sustenance and the ability to move forward even when private capital isn't there. When you get into later stages, particularly in aerospace, long-term capital is really important. So sovereign wealth funds like Temasek can be very, very important to provide kind of big checks, but checks that aren't on a 10-year timeline like a financial investor typically would be. And then I think what we've seen is very wealthy private individuals do a lot in the space. So Larry Page has done a lot in the space. The Claremont Group, which is run by, I can't remember the name of the Australian gentleman who does that, but he's a billionaire down in Australia. He funded Eviation and some other companies in the space like Magnix. So, I think there's a broad diversity of capital. I think financial investors, it's tougher to get financing for a 15-year project if your financial investor has a 10-year timeline, which is typically kind of the situation that they face.
So the CVCs that you're talking about in the family offices and things like that, are those at that kind of hollowed out middle level that Alexi was talking about, right? So that middle tier has sort of been documented, it has been wiped out. And so you're getting the early stage and then the late stage. Are the CVCs kind of stepping in, the Temaseks, the sovereign wealth funds, those guys, are those kind of at that middle tier, or are they still at the late stage?
Temasek would be late stage,
Okay.
unless, I don't know if you agree.
So there's still that need for that middle tier to come back in.
I'd say the middle tier is the biggest problem because usually very early stage investors will write a check to someone they like with an idea they like. And late stage investors can hire Robin Riddell at McKinsey or Yotam, who isn't here today, to go due diligence and bring in experts because the business is big enough to pay those kinds of fees. Middle tier companies, I think, have a real problem because this is a very high expertise area to invest in. And people without expertise get frightened of writing checks. So similar to what you were talking about, Alexi, people want some kind of validation from an expert that a mid-tier company makes sense to invest in. They can't afford to hire McKinsey to do that kind of validation. They can't do it themselves because it's such a specialized area. How do they get validation so they feel comfortable with investing?
Do you guys think that the disappearance of that middle tier is going to be a problem, though, for the seed stage or the earlier stage, the Series A kind of stage, if they are expecting that there won't be any way to hand this off to a middle tier, which will take it to a late stage? Like, is that going to have a chilling effect here in the early stages?
That's a good question. I think a lot of people are shifting to early stage more so than they would otherwise actually, right? Because right now what you're seeing is with depressed valuations, people are seeing them alternatively as deals, right? I mean, the way you invest typically is not when the market's high, you invest in deals that are low, right, that are undervalued. So I think in the startup space, if you're investing in the right companies, and maybe your fund is also early, right, there's also fund dynamics that go into this conversation, right, where if you're at the end of your 10-year, say traditional 10-year fund, you're not writing many early stage checks anymore, right, which is another reason why you see a lot of funds drying up, because there's no runway left, right, and outcomes are pushed out heavily. So it's just a mixed bag, yeah.
Well, and Dean, you mentioned, like people like Larry Page. I would think in an earlier time, Paul Allen, would have been involved in stuff like this. So, I mean, those guys might step in that stage, or are you not seeing them coming in at that size?
That's a good question. I don't know. I haven't seen. I mean, they're not really venture capitalists looking for a lot of things. I think people like that would often operate through personal connections, but I have not seen a lot of mid-stage investing from people like that. A little bit, but not a lot.
It's such an interesting development in the venture capital industry, to see a whole tier of firms kind of disappear. So either shift down or leave. So we're going to have to see what happens and when that comes back. So we've been talking about, there's a lot of optimism here with firms getting help from communities and community banking and things like that. What about the downside? Can you talk a little bit about things we should maybe worry about? And I'll start with you, Dean, because you see this kind of globally, this industry. And are there any things that, kind of worry you that you've seen recently?
Just with regard to the success of the companies, or with regard to what?
The prospects for the industry kind of, taking off and gaining a foothold?
Hey, I think what the industry really needs is some successes. And so, what I'm concerned with is that the industry realize those successes in the next couple of years to earn the right to have more investor capital. So I think that's one thing. I think there's a lot of risk in this space. I think a lot of investments were made on enthusiasm about concepts, but aviation is not an easy road, and aerospace is not an easy road, and so concepts can be quite hard to realize and quite expensive to realize, which can make them unviable. And so I think having an industry that actually vets these things, that's expert, is pretty important to the success overall of the industry. So I think those are, On the financial side, I think those are the key issues. I agree with Alexi that winnowing down some of the weaker concepts is probably going to be a good thing for the industry in the end.
John, go ahead. Yeah, what do you got?
There we go. I'm concerned about the interest rate environment. Just in our bank, when you can go out and park your money in treasuries at 5 to 6%, it takes a lot of money off the table. And a bank like ours, if we're going to fund a loan to build a manufacturing facility, we're going to loan that money out at 7.5 to 8.5%. But if I've got to go out and borrow that money, paying our depositors, 6%, there's no spread there. I can't make any money. And so the banks are going to start to lock down and not fund those projects. And, I think the feeling right now is that interest rates were going to start to dip a little bit in 2024, but the mantra now is that they're going to be higher for longer, and I think that's going to have a dramatic effect on the economy, and especially some of the development projects you're seeing out there. The money's going to start to dry up.
Alexi, do you have any concerns, kind of top of mind for you in this industry right now?
Yeah, I have a lot of concerns. How much time you got, right? No, I mean, venture capital is the industry of, highest risk, more or less, right, as it comes to an asset class. But alternatively, it's also, the asset class that can produce the greatest returns as well, right? You've seen 1,000x funds before when investing in the right company or, a couple of companies, let's say. Look, I mean, it's just there's a lot of analogies you can draw from here, right? For example, there's a great book called Crossing the Chasm by Jeffrey Moore that talks about just the typical life cycle, right, and buy-in cycle from, adopters to those creating, new companies, where, you've got early adopters, very difficult to cross this sort of chasm, which is the mid-stage. When you look at like the middle of the VC tiers disappear, right, there's going to be a lack of people that can cross that chasm to eventually become those incumbents, right? They're going to run out of capital, they're going to run out of, customer love, right? And those that are willing to spend the money to take a risk on a new technology. I mean, because let's face it, right? There's comfort in buying something that's the incumbent, right? And what often happens is most people are actually late adopters, right? It takes the right kind of buyer, and you have to weather storms along the way to become an incumbent. And there's a lot of other things that can happen along the way too. But without that funding, yeah, I mean, it can take either much longer or you will fail entirely, right? So particularly in the early stage, what we look at is really strength of team, right? The market they're addressing. What we're creating here with AAM is really an entirely new category, right? Disrupting all of transportation in a way. And fortunately goes hand in hand with saving the planet too. So I think those are great headwinds, or tailwinds, I should say. Sorry. But it's a long road. It's a really long road. We're not out of the woods yet, right? We're still in the middle of the hangover, in my opinion, right? From a lot of inflation.
Yeah, so that's what I wanted to ask about, because a lot of people here may have done the tour of Joby, yesterday. And so how far are we? So we're talking about flying cars here, like really whiz-bang cool stuff. How far are we from seeing folks flying around in cars? What do you guys, flying around in flying cars. What do you guys think, predicting the future here?
Well, there's a lot of reasons why you might invest in a flying car. One of those being that, it may never actually even see the road, but there's incredible proprietary technology that goes into something like that too, right? Especially in an entirely new market segment. So even if it never actually comes to fruition, doesn't mean it won't have a fantastic exit and your LPs will be very happy about it. That's one way of looking at it, right? Will we ever see it? I hope we do. I think there's a lot of sense it makes, right? When you look at eVTOL, for example, there's lots of hurdles, right? Some of that stuff relies on helicopter pads. How many helicopter pads can you build, right, to actually achieve like full scale in really disrupting the transportation industry, becoming an Uber, for example, right, where there's hundreds and hundreds of cars out there. that you're trying to disrupt. There's a lot of question marks,
Yeah.
right? But the tech is there. I think it's about operating, right, effectively. It's about regulation. It's also about funding, right? And I think being able to weather all those storms together and find something that makes sense. And user appetite. It's always about user appetite. Do people actually want to use your service or product, right? It has to make sense, right? The unit economics have to make sense. What I'm hearing in the eVTOL space is, it's supposed to be an Uber where you're, flying 100 miles in the eVTOL and it's $100, right? Well, explain those unit economics, right? I don't think that's proven yet. But the tech is there. It's fantastic technology, but to be a sustainable business, you have to go back to fundamentals, right? You have to prove that maybe one day it can be profitable, but you have to, I think, paint that vision very well, right, to really make it out of the woods. So we're getting there, right? I think everyone is here for that purpose, right, to try to make that happen.
Right, so the technology might work, but maybe we're still waiting to see what the killer app is.
Yeah, I mean, look at helicopters, right? There's tons of helicopters that were, designed and built, a decade ago that still haven't passed FAA, right, certification. So who's to say, these are legacy institutions that operate, in a legacy sort of way. It's very slow. So it takes the right amount of leverage, right? It's a lot of politics internally. And that's why I kind of go back to, partnering with incumbencies, right, that have been running that industry for so long. 'Cause I don't know. My humble opinion is I don't see another way to do it in the long run, but I guess time will tell, right?
Dean, how about you? What are your thoughts on that?
Hey, I'd say there's a difference between the financial success of investments and whether the industry's moving forward. So I think Chris asked a question when we were talking earlier about, hey, is this going to be an autonomous aircraft or not? And the answer was, hey, it's going to be pretty easy to fly, but we're not going to make it autonomous. And a comment I almost made was, or actually I did make was, hey, but the road is already paved to do a lot more things in an aircraft like JUMP by smaller aircraft that are already, for example, if you've got if you want to turn around an aircraft in a minute after you get a call, you've got automated into a lot of drones, checklists, pre-flight checklists, and the drone actually does 95% of the pre-flight checklist for you, and the human only has to do 5% of it. And that stuff's out there now, but when you build the bigger aircraft, when you build the more aggressive concept, that technology gets built into that concept. So I think anybody in the industry would tell you the industry has moved forward massively in terms of technology over the 5 years. And whether flying cars become, whatever it was, a $400 billion market, like Goldman was predicting or maybe it was Morgan Stanley was predicting a few years ago, or it looks more like an incremental growth in the helicopter market of 3 or 4x, that technology is going to be out there, it's going to be operating, it's going to be successful. If it turns out to be a 3 or 4x growth in the helicopter market, as opposed to a $400 billion market, the people who invested in those flying car concepts won't make as much money, but they still will have achieved an amazing step forward in transportation technology, and all of those steps forward will fuel other places where that technology can be used. So I don't see that there's any turning back. I don't see that there's any loss of kind of fidelity in where the ecosystem's going. There are going to be a lot of financial successes and failures. And I'll just tell you one anecdote. San Francisco was built on, people think it was built on the gold rush. It was really built on the mother lode in Virginia City. And if you go up to Virginia City sometime, there's a saloon there that shows the 4,500 mining companies that were started in Virginia City. 4,500. Take a guess how many actually made money in the end. Well, like a serious amount of money, not broke even. 4. 4. But we've got San Francisco as a massive city, as a center of innovation, cultural hub, biggest city on the West Coast for a very, very long time that was a consequence of all of that activity, not just those 4 companies.
I'm still kind of wondering about the question of time, though, right? So is this a technology of tomorrow and it always will be? Or, is this really, can we imagine when this is going to happen? And John, as someone who builds infrastructure, you're familiar with all the red tape, the policies, the hurdles to getting stuff done to build the kinds of, things that might need to be built, like helicopter pads and whatnot. I mean, so as someone who's closer to that whole policy environment, what are your thoughts on
Yeah, my
the question
thoughts are
of
that probably mass adoption is a ways off, but there are certain markets that I know that the bigger companies, the Jobies and the Archers, are already doing a real estate grab right now to find places to land their crafts and build their ports. So I think we will see some test markets sooner than later, but mass adoption, I think, is a ways away.
Hey, I think aviation's in a race with financial services for the most regulated, most hamstrung industry in the world.
I agree with you.
Okay, so no one's really telling me when I'm going to see this stuff. John, come on, you're the closest to a time frame.
I have no idea, but I would think maybe 2027.
I promise I won't hold you to that. Anybody else have predictions? Dean, you see a lot of stuff,
Hey,
right? All over the world.
You're seeing it now. Like, I don't know if you've seen, they're unloading those aircraft and running flights with the Army. Like, people are flying beyond visual line in Australia. This stuff's all happening. I think what you're really asking is, when is it going to happen at massive scale? And, I think that's going to take a while.
And maybe kind of like, when is it going to happen nearby or for ordinary folks? Because, military stuff in Australia, that's
Hey, I was at
else.
Marina yesterday. I think I saw a Joby aircraft fly by.
Okay.
I don't know about you guys, if you were out there. I think I saw it fly.
Alexi, you're nodding. Go ahead, tell us what you know.
No, I mean, I don't have a crystal ball like anyone else here. But I was gonna. He took the words from my mouth. I mean, it's so true. It's out there already. But you're right. There's commercial viability, and then there's perhaps what the military applications look like. I think, the question is like, what does scale look like, and how soon is it? Yeah, it's anyone's guess, honestly. Lots of regulation needs to be overcome, and I don't know, but I do think this area and really the coastline, I think, has some magic to it, right? So I think we're in prime position for at least, testing areas, for attracting talent, right? Building facilities around it, and at least building from a stronghold to then expand outward with, right? I don't think you can start this, like I said, in the Silicon Valley proper. It has to be somewhere where there's space, and it's easier to get approval to do lots and lots of test flights, right? So, yeah. It also depends on how much time is left in the fund for all the VCs that invested in Joby. So everyone wants to see their return at the end of their fund.
So I think we're going to have some audience questions from Josh, but let me ask one kind of last thing, because you mentioned Australia, right? This is a global industry. And there are firms in Europe. So this is a question for Dean. What's going on over in Europe or other places that you think there might be, quick adoption of this? Is there anyone ahead of us? And you mentioned Australia, but that was for military purposes.
Yeah, so I think any self-respecting company in this space does venue shop to figure out where they can get deployed the fastest and weighs that up. It's easier to fly in Australia than it is in Europe, and it's easier to get something done in Europe than it is in the US. So, the Europeans are very structured. They have a very clear framework. The FAA framework is more waiver-based, so it's more individual. It's less hard. It's harder in advance to know where you stand. But, different things go in different paces around the world. So the U.S. has a lot of innovative companies, a lot of ideas. There's a lot of ways that you can do things in the U.S. that are fast. And so there's opportunity everywhere, really.
But so nobody's beating us yet to the... to the punch.
Hey, there's 70,000 drone companies in the world.
Yeah, exactly.
It's less a race of us against Europe or us against China, and it's more like a giant competitive
Storm.
brawl.
Yeah. That's great. Okay, so we have a question from the audience. So this is for you, Dean. What is your method for hedging risk from regulatory hurdles and obstacles to the timeline and your return horizon in your portfolio? So we're talking about the, kind of like if you have a 10-year kind of timeline, and what unit economics timeline makes sense for you?
Yeah, so obviously really large aircraft take a really long time. And so we typically don't invest in those just because it's outside of the time frame of the fund and the regulatory process just takes too long. So it's not really a hedge. It's just like, hey, I can't make this work. We look at the regulatory hurdles for the various aircraft that, or concepts that we do invest in, and we try to talk with the management team about, okay, how are you actually going to accumulate flight hours and experience given the hurdles that you're facing? And in general, the way that we think about it is you want to be able to support the company while it's gaining that experience, and if you want to be advantaged in the long term, you need to gain a lot of flight hours. And so those are things that we look at. We typically aim to exit businesses in 7 years. Some of them we have longer targets for, some of them are shorter.
And that test flight issue goes back to what Alexi is talking about, where could we actually do this, right? And we're kind of have an advantage in that area. Josh, do we have other questions from the audience?
Not seeing any there.
Please, okay, yeah. If anyone has any, don't be shy.
I'll just ask one,
Yeah,
I think, for
please.
John. Just in terms of, if we're trying to be able to attract and retain more tech companies here, what kind of facilities, like, for example, in the industrial space, is there a market for that from a banking and financing perspective, or is that something that you are eager to finance, or what can you say about that?
It's all about the numbers, right? As long as that there's, we don't want to get involved in something where it's build it and hope they will come, right? So we want to make sure that there's demand before we move to construction. So, especially in this area seems to be, and when I talk about this area, I'm talking about Marina and the Fort Ord reuse. There seems to be a desire for development, which is much more than what you see in the Monterey Bay area. Monterey Bay is very, very difficult to develop anything. You've got to go through coastal commission, just takes a lot of time. But this particular space really wants to see growth and really wants to build a vibrant community. So this is a good place to be in. Yes, we would invest heavily here.
Thank you. Alexi.
I got a question for John. You talked about secondary like payment sources. I don't know how St. Cruz County Bank operates, but how is venture debt perceived, right?
So if it's convertible debt, we look at it as equity, if it's convertible. But if it's actually a debt fund, then we've got to take that as we need to figure out how that's going to be repaid.
Thanks.
Okay, so the question is, globally, are there any sleeper locations that where this industry, advanced air mobility, might spring up? Is that the question? Okay. Okay. Yeah.
I have an opinion.
Great.
Canada, actually, right? I think there's large swaths of land. I know from what I'd understood talking to Aleph, right? My experience with the portfolio company, they're considering doing a lot of their flights over there actually because it's there's much less regulation. yeah, they're just, they kind of let a lot of things go, right? So,
I'd say the Ukraine is going to be one of the top 2 or 3 countries in the world in unmanned aviation when the war ends. They are accumulating experience faster than any other country in the world right now in flying and modifying drones. And not only have they done that, but they've created an entirely new paradigm for mobilizing civil society into aviation. So there's an organization there called Aerodivka, which was really, it started off as sort of the drone club of the Ukraine. And when the Russians first invaded Ukraine in 2014, they converted their efforts to sort of supporting the government's Army of Drones campaign. And there are over 100,000 people tinkering around with drones and helping the Ukrainian government in their efforts to defeat the Russian invaders there. That kind of civil mobilization is just incredible. And of course, when you're in the Ukraine, you know, you build a drone and they don't say, hey, what kind of flight testing have you done on it? They say, when can I fly a grenade over and blow up that Russian guy over there? So this is sort of the environment that they're working in. And the progress is just absolutely unbelievable.
And they also have a trained technology workforce. I mean, they had that before the war, so.
Yeah, they were the center of, really one of the centers of Russian aerospace in Soviet times.
Great question, thank you. Any other questions from the audience? You know, I think that that kind of like invention is or necessity is the mother of invention. I mean, I think that's a great example. And Alexi, you talked about Canada. Are you thinking about any specific use cases? And, you know, I'm thinking about the fires that happen all summer, and, you know, there might be other disasters going on that they could use drones for.
all the
for
above. I mean,
aviation.
I don't have a deep opinion on that. I know it's just a consideration as it checks a couple different boxes, like I mentioned. So,
But they do have like some characteristics that make it urgent for them to develop this stuff, right? A huge land mass, very low population density, a lot of places that don't have roads, very difficult weather conditions that make it difficult to get vehicles.
and then
out
back to low-level regulation again, right? So,
Yeah, well, you know, it's interesting, just to follow up on your Ukraine point there, actually, and your San Francisco point, where San Francisco made its wealth, and another piece, along with the mother lode, or the silver mines there, was the ironworks. That was a mechanism for building ships, for doing the mining, and for being involved in wars. And so wars throughout history have actually led to major technological innovations and wealth creation. So interesting, it's not a good, you know, it's not like something you want to promote, but if you look at history, that's kind of how it's happened. So I think you're probably right on the Ukraine story. And we know Israel's big on the drone space too, so we'll see what happens down there. But yeah, kind of strange things happen, you know, how the ways of history unfold. Looks like we got another question.
Oh, great, okay. Can you talk more about the indicators demand that you're looking for, indicators of demand? So how do you measure and quantify demand in this nascent space? So that's again where you don't have known customers and how many they are, what they're willing to pay, et cetera. It's a great question.
Go ahead.
yeah, at a high level, this will be quick, right? I mean, there are just so many analogies, I think, to how you quantify demand and look at different types of spaces that are still emerging. You know, for anyone that studies history, I mean, what's obvious is history repeats itself, but in different ways, right? I mean, when the horse and buggy was replaced by the vehicle, right? You got a lot of naysayers as well, right? Oh, you're going to run out of distance, right? You're going to have to recharge that thing. Where's it going to happen? Well, they built gas stations, right? And it took forever to evolve into what it is now, but it's been a long time now, and the internal combustion engine has become perfected in a way, but it's due for disruption for a number of reasons, right? And we're just on the precipice of that now. If you're looking at history again, just repeating itself, right? There's no stopping innovation, at least at the juncture our culture's in now. And if anything, it's actually accelerating, right? And the world 10 years from now will look dramatically different than it did 10 years ago. So in a similar vein, you were asking about how soon do we think it'll happen. I think sooner than people think, but yeah, maybe we'll stop there.
Yeah, demand is really well studied in aviation, in commercial aviation. So typically, depending on the situation, but typically in aviation, if you reduce the cost of the transportation by 1%, you're going to increase demand by 2 to 5%, and it's situational to some extent. So if you were to say, hey, I'm going to take the cost of helicopter transportation down by 50%, unstimulated market, you might expect demand for that kind of transportation to increase by 250%. So you can use those stim factors when you're thinking about substitution. I think that the critical challenge around estimating demand for a lot of these things is it's not like I'm replacing one aircraft. For some things it's easy, like a 9-seat aircraft. I can take 40 or 50% of the cost out of a Caravan if I run Electra's 9-seat hybrid electric proposed design. The tricky part is when you're doing something like, hey, I'm going to inspect cell towers with an aircraft instead of driving on the ground. And this is where we're getting into labor substitution. And so, because you don't have a team of people going out there and pointing cameras at things and climbing towers and stuff like that, you might be saving 90 or 95% of the labor. And you're no longer really that worried about the transportation cost. You're worried that now I no longer have to send an engineering team out to do a survey or to do an inspection. The stimulation economics associated with that, I think, are very unpredictable, but I think they're massive because the second order effects are very, very huge. A lot of these inspections, a lot of these sorts of labor-intensive activities like surveys, those things involve assets that are massively valuable. And it's the same thing in drone delivery. So if I told you that I want to distribute a good by making it in a place where you could sit down and consume it, or I can deliver it to you, and I'm going to do that in the most expensive real estate and the most subscale way possible, you would be describing the restaurant industry, right? Now, what if I told you that I could get you the food in 2 minutes by air? Would you still need 50,000 or 500,000 retail locations for the restaurant industry? Or would you have ghost kitchens that consolidated all that food and moved it out? So I think these secondary implications for demand are highly unpredictable, but they're also massive. And I'll tell you one story about that I think I mentioned last year, but it's a story of ice cream shops in the United States. So in the 1930s, every town, every little neighborhood had its own ice cream shop. And that's because homes didn't have refrigeration and trucks didn't have refrigeration. And Fred Jones in 1939 invented refrigerated trucking. And by 1980, the corner ice cream shop had largely gone away. You can still go out and buy a scoop and stuff, but most ice cream gets sold through supermarkets, and it's made in a very small number of nationally oriented or super regional factories. And so, will there be implications to all this stuff for demand and asset redistribution and restructuring the economy? Absolutely. I think that implications are going to be huge.
And I see that there's questions heating up, but what I would say is this is a good time to pause because we do have a little reception, and it might be a good subject to enjoy over a soda or a beer or a glass of wine.
Right, and I love this question about insurance, so.
Unless
I
you
hope
want to
somebody-
take it, in which
no,
case
no.
you guys can go ahead. It's up to you. I'm fine
Well, I
with
was just going
if
to say,
somebody
you know,
wants to
insurance is a great indicator of things too. Does anyone want to take the insurance question of, you know, how it's affecting investment? The problem of okay. Go ahead, Dean, do you have something to?
It's a plunge into the unknown.
Okay. Well, so this is a.
Maybe the microphone's a plunge into the unknown.
It's a plunge into the unknown.
green light comes on.
You know, so let me just close this panel by saying investors, both in the banking side and in the equity side, are always forward-looking. And that's what makes this panel so interesting to me and trying to predict the future here. What we heard was a lot of question marks, but that doesn't, for me at least, dent this idea that this is going to happen. And what we don't know, the question marks are about how this is actually going to play out, not if. And so, anyway, I at least learned a lot. So I want to thank my guests for their insight and their time and sharing all their knowledge and experience with us. So thank you so much. And thank you all for joining.
Thank you.
Yes, thank you very much, all of you. And please do stick around for a beverage after. Yes, you're welcome to, you can get up if you want, come this way.